See, I think if the investor has got a time horizon of at least 12 to 18 months, I think Berger Paints and Bharat Dynamics both look pretty promising. See, Bharat Dynamics, initially, to talk about the defense sector, is a very prominent player in the surface to air missiles. They have developed several new products for the export market. They have a large order book of almost 4,000 odd crores. So I think visibility in the next say 12 to 18 months is pretty solid, but the stock has moved up quite significantly. So I think unless the investor has a 12 to 18-month call, the risk reward in the short term may not be great, but yes, in the longer term, he could definitely make a lot of money. And coming to Berger Paints, I think the biggest positive for Berger Paints as well as all the paint players is that crude oil prices have corrected sharply. This is following the fact that OPEC is now having some issues of controlling actions within its member community, and that is the reason oil prices have corrected sharply. Now, if this trend continues, then definitely raw material prices for Berger Paints could obviously behave in a more favorable manner, and that could improve the margins going forward. So I think Berger Paints, even at the current level, one could accumulate, but keep a time frame of again 12 to 18 months. We could expect a decent upside. If the crude prices remain at the current level, then that could obviously mean better profitability for the company going forward. I think as far as HG Infra is concerned, the stock has corrected slightly mildly in the very near term. But I think if you look at the order book and look at the kind of growth trajectory which the management has commented post the quarter two numbers, I think over the next 6 to 12 months, a decent upside can be expected here. A price of around 950 to 1,000 is comfortably possible, from the current level. So a decent upside is possible. And as far as La Puela is concerned, it's a very well-known brand in the cutlery space, has a premium positioning in the market. So I think here also, if the investor can hold on for the next 12 to 15 months, a price target of at least 425 to 450 looks possible. I think he needs to give in some more time here. Both are very good positional bets, but I think you need to give in a time of 12 to 15 months. Prakash Pipes and Prakash Industries both belong to the same group. In fact, Prakash Pipe was a demerged entity. My sense is, Prakash Pipes is a much better bet, despite the fact that, he's already made a decent gain here. I would suggest that he should hold on here. He could expect a further decent upside because, from the agriculture space, Prakash Pipes has got a decent market share here, plus opportunities in this space are increasing quite rapidly. So here possibly another 40-50 rupees of price of say 425, 450 looks possible. Prakash Industries is basically into steel making. They have an iron ore mine. And I think for the last couple of quarters, numbers have been pretty encouraging. So I think, here also, I would suggest that if he wants to buy this share independently and take a position for the next 12 to 15 months, he could definitely buy in a small position. Valuations are attractive. I would believe that once global metal prices start improving, that would further re-rate the stock. But yes, definitely at the current levels, he could nimble into a small quantity and hold on for the next 12 to 15 months. I think, Srishti, I think if he's a long-term investor, I think he should hang on there because casino business is extremely profitable and it is India's only listed casino stock. The stock has been beaten down largely because of the excise case, which is still, uncertain whether it goes against the company or whether there's some solution which comes out. My sense is that if he has a slightly high risk appetite, then I think he should average the quantity and keep a time frame of at least next 12 to 18 months. I would not be surprised that if any solution comes about in the near term, then I think that could make the stock bounce quite sharply. Otherwise, if he has a short term view, I think he should sell on rise. Again, hotel business is extremely profitable, and despite the World Cup over and the G20 now getting over in November, our sense is that the hotel business is going to grow quite rapidly, considering the fact that overall this is a sector which grows with the economy. Travel and tourism is something which is going to grow by leaps and bounds over the next couple of years. So I would believe that yes, if the investor has a 12 to 18 month time horizon, he could definitely look at buying onto this company. Although the company is not profit making, I would believe the next 12 to 18 months is a good period to accumulate. You could expect a decent risk reward, in the medium term. I think, Cheryl, power generation is a very strong theme in the market, and CESC is a very strong player in Eastern India. The sense is that, if they get into renewable energy, that would obviously add on to their capacity. And obviously, green energy is now a very flavored kind of sector. My sense is that if the, investor can hold on for the next 12 to 18 months, then a price of at least 140, 150 looks possible. I think they've been doing pretty well on the generation side. The green energy side business is yet we don't know what's the kind of capital outlay the company would be spending, but definitely at current level and considering the existing business prospects, one can definitely buy on dips and look at a kind of a time frame of at least 12 to 18 months and get a decent risk reward. I think within the paper market, West Coast is a premium manufacturer of printing and writing paper. And in fact, one of the largest, paper manufacturers in the country. My sense is that paper market is going to show a good amount of buoyancy, considering that as the economy grows, paper consumption has grown. Post COVID, I think clearly we have seen most of the companies increasing prices, and in a supply crunch market, one benefit which most of the existing players like West Coast Paper have enjoyed is that demand is much higher than supply. So I think if he can have a time frame of 12 to 18 months, he could definitely buy West Coast Paper on declines. The stock is currently available at moderate to expensive valuation. So any dip in the price could be a good opportunity for him to accumulate, but keep a time frame of at least 12 to 18 months. Mid-cap company operating in the construction space, if we can give a time frame of at least next 12 to 15 months, it's a small counter. Numbers, for the last couple of quarters have been pretty decent. So I think if you can keep a time frame of at least 12 to 15 months, I think he can hold on. He can even buy at the current odd levels. But at least the next 6 to 12 months is a time frame where he needs to invest and hold on. See, I think Shristi, 1 year is a little too short, because considering the fact that Bajaj Finance is already a stock where decent upside has already happened. My sense is after Geo Finance has entered the markets, I think investors should look at companies where alpha generation over the next 2 3 years are going to be quite significant. So it doesn't point out to say that Bajaj Finance is a bad corporate or upside won't come, but the upside which possibly could come in could be at best be 15-20%. But on the other hand, a stock like Geo Finance could possibly work out better if the investor has a couple of years in mind, because I believe the opportunity for a company like Geo Finance is far much better than Bajaj Finance. So I think, if he has a short-term view and he wants a 14-15 upside, then I think Bajaj Finance can definitely fit in the bill. But a much higher alpha could come in from a stock like Geo Finance over the longer term. My guess is, I think Karnataka Bank has corrected, but most of the negatives are in the price. I think he should give in a little more time here, because the bank has shown pretty decent numbers in terms of asset quality, in terms of loan disbursements. So I think despite the fact that the stock has underperformed, if he can give in another 6 to 12 months, I think he would definitely recover his cost and make a decent risk reward. So I would still suggest that he should not book a loss. Please hold on for the next 12 to 15 months. He should expect a decent risk upside, risk reward from the current levels. Yeah, I think Yatharth Hospital got listed recently, and I think the first quarter post the listing has been quite commendable. In fact, it's a hospital which operates somewhere in Madhya Pradesh, and I think it's got a decent kind of a specialized setup which has helped it manage to record decent EBITDA margins. Hospital spaces in India are definitely quite promising, considering the kind of big opportunity in the healthcare market. So here I would suggest that anything below 400 rupees could definitely be used as a good entry point to accumulate. The current holding, the investor can definitely look at holding on for the next 12 to 18 months. I think good long-term prospects, so I think he should continue to hold. Yeah, I think Protean is a good long-term bet, Srishti. It's not a growth stock in that sense, but I think it's a very steady kind of business where the company has a monopoly kind of presence, specifically in the UPI as well as in the government regulatory space. Our sense is that if the investor has a 2 to 3 year kind of time frame, then only he should hold on. I think better bets in terms of growth could be companies like CDSL, where the opportunity for scale up is quite immense. So I think CDSL can be a better choice, but in case he doesn't want to switch, he can hold on to Protean for the next say 18 to 24 months. Hold on for the longer term, because Zomato has now started showing very decent numbers. In fact, for the last 2 quarters, the company has shown decent profits, although most of the profits have come from other income. But the market is excited that this is a very concentrated space with only two players, Zomato and Swiggy. And once Swiggy goes public, you're going to see a decent re-rating in Zomato once again. My sense is that Zomato can be held on for the next 2 years. I think operationally, numbers are going to get better. And once the company turns around, starts making cash profits, I think the markets would further re-rate the stock. As far as Yes Bank is concerned, I think it's better to put the bet on some well-established banks like an IDFC First Bank or a Federal Bank. Yes Bank definitely has done better, but I think if you compare it with all the other banks, it's still a long way ahead for it to become extremely profitable and give a very decent risk reward. Asset quality has obviously improved because of some restructuring. But in terms of the capital adequacy ratio, it could happen that they might go in for another public offer that could further, dilute the book value. So I think avoid Yes Bank and try to convert it to either IDFC First Bank or Federal Bank.